as long as NASDAQ and SPX are rallying after they broke down versus the producer price index, silver, that's where it shines. That's where you should be long silver on those bear market rallies for US equities. It's going to outperform gold. It's going to outperform practically anything. Nobody talked about gold. Inflation was actually breaking down. But the chart was telling us that higher lows on gold, hitting 1350, clear breakout in June. And that was probably the last great entry for gold.
Karim, a technical trader from Northstar and Badcharts, made an appearance on the Jay Martin Show, where he discussed his outlook for gold, silver, and the money supply. He highlighted the fact that gold has been outperforming the money supply, which he sees as a positive indicator. This means that gold's value has been increasing at a faster rate than the overall money supply in circulation. Typically, when the stock market experiences growth, gold tends to exhibit different behavior. However, in recent times, gold has been reaching its highest value, even as the stock market performs well. Patrick views this as a significant development. According to his perspective, for the stock market to truly demonstrate strength and enter a phase of substantial growth, it should outpace the performance of gold. Patrick also expects that gold is doing compared to the SPX, which is a stock market index. He believes that for there to be a big change in investor interest towards gold, it needs to be worth about half of the SPX. Right now, gold is stable, but it needs to break out more to show that investors are starting to prefer it over stocks. During the interview, Patrick also highlighted the intriguing behavior of gold, which reached all-time highs while the stock market rallied. He mentioned that this observation held significance because gold typically exhibited different behavior. Now let's watch clips from Karim's interview with the Jay Martin Show. Please make sure to watch the entire video and consider subscribing to our channel. Don't forget to turn on post notifications so you never miss any upload of ours. Thanks and enjoy the video.
You look at gold. Gold's at all-time highs or close to all-time highs, Jay. Nobody's believing it. Like, are people sleeping? Gold's telling you something. It's not back down at 1350 or 1100 or 900. It's hogging all-time highs while the SPX is rallying. So that is not, let me put it another way. SPX has to kick gold's butt, really kick its butt to prove that it's in a secular growth stock, price earnings expansion cycle, and it's not quite happening now. Gold, look, before I move on, gold did not break out versus SPX yet. The producer price index did break out versus SPX. Gold is hanging in there. Gold needs to be worth about half of the SPX. Once gold is worth half of the SPX, then the momentum is going to start shifting into gold more than it is now. So gold right now is starting to slow down, moving sideways versus SPX. Okay, I'll show you one more chart before you hammer me with a hard question. I just have to show this chart just to, I'll just do it fast here. Here is XAU divided by SPX. So right here, guys, is the top. So here's gold outperforming since 2001, outperforming SPX for a while. Breaks down. So now it's SPX that's been outperforming gold. And just here, this rally here, the 2018 to 2020 rally for gold versus SPX, while gold here went from 1200 all the way to 2000, that was simply a bear market rally versus the SPX. So that was just an appetizer of what, even if gold nominally went up that much, it hasn't broken out versus SPX. But right here, this is the level, Jay. If ever, I'll put it around dot. If ever gold's able to close, and it's trying like a lot there, it's been very close above, almost above the 0.5 half, but the seller's coming in by the end of the month. If gold gets above that, that means the momentum, the downwards momentum of gold versus SPX is starting to shift. And then you're back here at a scenario back in 2001, and I'll zoom out and you'll see where we are. And this should give you a little bit of shivers. Look at the levels where we are now, at the same levels it was back in 1972. So the ratio, actually, what it tells you is there's a balance between, and gold represents purchasing power inversely. So the US dollar adjusted for inflation, gold pretty much, I could show you a chart also for that. It tracks pretty much your purchasing power. So there's a balance between purchasing power destruction represented via gold and growth stocks. And this cycle just repeats over and over. Here's a blow off top in favor of SPX in the 2000s. So it's very close to having a bigger move. So gold outperforming SPX. this chart a solid monthly close for gold versus SPX above 0.5. Until it does that, then I call it no man's land, where you think it's in a bull run because you see bullish price action on the daily chart. Oh man, this is it. Gold's at 2050, but then by the end of the month, it gets sold into. So that's the first big piece of evidence. The second piece you want to see, but not necessarily you want to see the 30-year yields break out upwards versus the 10-year yield chart. You want to see initial claims, and this is the U.S. job initial claims. For some reason, maybe your fundamental guys could chime in on that in the comments or explain why that is. But the initial claims, I'll just show you this chart again. I'm sorry, like the picture is going to be worth 1,000.
That's great. I appreciate it.
It's actually a chart I was working on recently. So I'll just pop it up. I'm going to hide the producer price index. I'll hide it.
Patrick believes that silver typically follows the performance of gold, meaning that when gold performs well, silver tends to do the same. Patrick further emphasizes that gold has already broken out in relation to the money supply, indicating a positive shift, and he anticipates a potential breakout for silver as well. However, he advises caution and stresses the importance of a convincing breakout accompanied by substantial evidence to validate the upward trend. Specifically addressing silver, Patrick underscores the significance of surpassing a particular price level, $28, in order to eliminate doubts and potentially trigger a significant upward movement in its value. He acknowledges the frustrations that investors often face in the gold and silver markets, as many pundits frequently make predictions of breakouts without solid evidence.
Here's gold versus money supply. So that's the black line, gold outperforming money supply. And here I overlaid the silver price. Silver tracks the capital flows of gold. So the more gold is able to outperform money supply, SPX, if I pop up the silver chart on that, you'll see that silver tracks the performance of gold versus money supply. Here's silver just going bonkers. And look, in the 2000s, pretty much the same thing. Gold outperforming money supply, silver just goes up. And this is very good for silver. Gold has broken out of an early breakout line. So it's not a flat. If you in TAJ, if you have a flat horizontal line, let's say you jump on a flat line, if ever you once you finish jumping and you fall, usually there's a floor, right? You won't fall lower. But if you have a slanted trend line, if you jump out and you break out, this is the trap. People, they look at slanted trend lines and say, oh, it's a breakout. You go up, but because the floor is lower on the retest, you could end up lower than your entry point. So it's actually, these lines are telling you that there's momentum shift. So this one, it's not very steep. It's a good trend line, not flat, but not 100% steep. Gold has broken out versus money supply on that level. And here's a silver chart. Silver's hogging a 12-year breakout line. So this stuff, super, super bullish. And if you look down at the 10-year rate of change for gold versus money supply, it's rock bottom and starting to move up. There's no FOMO. I don't know if you have a gauge for FOMO as a sentiment trader, but on this time frame, right? Because there's sentiment on smaller time frames, gold could have a big rally and people are, but on this 10-year rate of change time frame, there's nowhere near the FOMO we had back in 2011, right? When people thought it was the end of the world, the Greece defaults, all that stuff. It's just turning up. So this you could see as a fuel reservoir in favor of precious metals, commodities, miners, all that stuff. There's still rock bottom there. The 10-year rate of change momentum there, really, really low. And I'll give you another clue also for silver. So that's my silver. That's for the gold chart. Silver is pretty much the same thing. I'll just put there's two important trend lines for silver. There's this one up here. And I'll put on the line chart just to remove the noise. 1 touch, 2, 3, 4 touches. So for a trend line to morph into existence, it's 3 touches or more. If you have 4 touches and then it breaks out on the 5th, that's a super valid trend line. So if this line has to be closed above, Jay, to remove all doubt, but the $28 level, it comes from here. It comes from this wall here. So back, this massive top, once it broke down, that support becomes resistance. And look here how we had a hard time going back above this zone. So if we close above this descending trend line, we're going to have a vacuum. We're going to go test that 28 for sure. If ever we get a close above 28, then it's just going to rocket upwards like this type of speed there. It's going to be, everybody who has a silver newsletter is going to go bonkers, silver squeeze, blah, blah, blah. Like the froth is going to start to build up really much once we close above 28.
Looking ahead, the connection between gold, silver, and the stock market will continue to be closely observed. The intriguing behavior of gold reaching all-time highs while the stock market rallies has sparked interest and raised questions about the future dynamics between these assets. The analysis presented suggests that for the stock market to demonstrate true strength and enter a phase of substantial growth, it will need to outperform gold in terms of performance. How do you think the relationship between gold, silver, and the stock market will evolve in the future? Please share your comments and observations in the comment section below. Additionally, if you found this video informative, don't forget to give it a thumbs up, subscribe to our channel, and enable notifications to stay informed about our latest videos on silver, gold, and copper. Thank you for watching, and we appreciate your support.